So this technical analysis, okay, it will be in two parts. First I will do it on the weekly chart, and then I will do it on the daily chart, and this way we will be able to get the most accurate results. Okay, and we are getting these these accurate results, okay, for last couple of weeks, okay, and not just couple of weeks but for many months. Okay, so you can see here, because we are doing it on these two charts, weekly and daily. So first I will do the technical analysis on the weekly chart. Okay, uh, fine. So on this, the weekly chart, let me remove this trend line. Just 1 second. Okay, the trend line is removed. Fine. So if you see this, the last candle, this is a very heavy bearish candle. Okay, and this is a kind of pattern. See, this is a kind of pattern, we call it as three black crows. Okay, three black crows. Okay, so what generally happens in here, see, three black the pattern of three black crows, generally it says that there is a change in the market, but before the change it also says that market is going to come down. Okay, so well, in general, what this three black crows is that the open of open or the high of one candle must be minimum 50% of this the previous candle. Okay, 50% of this the previous candle. So this is actually the three black crows, but in this case, the theory of three black crows, where it says that there is going to be a change in the market, okay, it doesn't seem to be fit, because market has just come down. Okay, and market has reached the top. Okay, yes. So what at most can happen is that, considering this theory of three black crows, on Monday market may come down heavily, means the open will be the high of the market, the open will be the high. Okay, so this is expected in this the candle, okay, in the weekly candle here, but it will be more clear on the daily chart. Okay, so daily charts, okay, they are most accurate, but weekly charts, okay, derive the momentum of or the movement of the market. Okay, so this is a bear candle, and bear candle, this is a very heavy bear candle, and this very heavy bear candle, it says that there are bear sentiments in the market. Now, okay, so we have these support and resistances here. Let me write it down. So we have very heavy resistance at 36,650,655, but now it is not expected that market will move okay, from 34,899, sorry, from 34,900 to 36,600. Let me just remove this line. Okay, it is more clear here. Then we have one more support. Okay, it is, sorry, one more resistance, it is at 36,110. So this 36,110, it was very critical in last week. Okay, and it has played a very important role in last week. Okay, and then we have very strong resistance, another strong resistance at 35,700. We have at 35,700, and then we have, okay, then we have another resistance here, somewhere around okay, 35,150. 35,150. Let me draw a line here, this the resistance line here. Okay, okay, fine. Then we have a very strong support, and it is at 34,530. 34,530. Okay, so these are these are all the support and resistances, but because market has already come down, this much heavily, so market is expected to hit this particular support. Okay, and then it will retrace. Okay, so market is not going down here. So market is not expected to move down here, but rather, so this is not expected to happen. Market will come, hit this 34,530, and then market will bounce back. Okay, this is what is most probably or most likely to happen on the weekly chart. So it will be more clear on the daily chart, but again on the daily chart, okay, these support and resistances, they will remain same on also on the daily chart. Now okay, so this is the lower band of the Bollinger Band. This is the this, and the market closed on the weekly chart, market closed below the median of the Bollinger Band, which means the market is bearish on the weekly chart. Okay, so market will come down, find support here 34,530, and this the Bollinger Band, okay, it will also increase to somewhere around this level. Okay, there we have, you know, very heavy confluence zone, it is coming here. So yes, you can expect the market to come down to this level. This is also, this is what, this is 34,300. Yep, 34,300, not below that, not below 34,300 at most, because we have a very heavy confluence zone, and also the lower band of the Bollinger Band will come to this this level next week. Okay, and then a sharp retrace. Fine. So through the Bollinger Band, it is bearish. Now the moving averages. See, market is tangled here in between the moving averages. So the see, the basics of the stock market. It says that whenever market is in the moving averages, never trade, never ever trade when the market is trading within the moving averages. So let the market be either side of the moving averages, and then only you should trade. Okay, so when you see that market, so this moving average, okay, on Monday this moving average will move to somewhere this part. Okay, here this moving average will be here, and if you see market is coming and market has crossed this moving average here around 34,800, then for sure it is coming down, it is coming down to hit 34,550, and it is coming down to hit 34,300. Okay, and but again, you know, these things, particularly these things, okay, they will be more clear on the daily chart, but you cannot you cannot say that it is not going to work on the weekly chart. See, this moving average, it holded the market here, okay, on the only because of the this the moving this weekly chart. Okay, because these are the, so this means if you were trading on the daily chart, okay, and if you were thinking like what would be the bottom point, okay, where the market will stop, so market finally found this support on the weekly chart here. Okay, so it is of, you know, high importance here. Anyways, through moving averages, so through moving averages market is because three moving averages, so market is bearish through moving averages on the weekly chart. Through Bollinger Band, through moving averages, market is bearish. Now through Ichimoku, market is bullish. And if you look into, you know, some other technical indicators here, then we see on through MACD, market is bearish, market is clearly bearish through MACD. Okay, and last week also I told you that market is bearish, and last week it was marginally bearish. So, and that was the reason why I told you that market is expected to come down, and it will come down heavily. Then through stock RSI, market is clearly bearish. Through so MACD and stock RSI are saying that market is bearish, which means that market is bearish, because they, the theory is that whenever MACD and stock RSI, whenever they support one direction, okay, or one party, either the bulls or the bears, then the market is expected to move into that particular direction. Okay, then we have divergence has come down. Then we have momentum. So momentum is on decline. So earlier there was early the momentum was in favor of bulls, but now the momentum, okay, it is declining, it is continuously declining. So through all of the technical indicators, on the weekly chart, market is bearish. It is very clear through all of the technical indicators on the weekly chart, market is bearish. Now let's move on to the daily chart to see what is supposed to happen and what is most likely to happen and how it will happen. Okay, so we are here on the daily chart. This is the daily chart, means one candle represents one day. Okay, so we are here on the chart, Now this is the daily chart. These are the daily candles. See, this is a very heavy bear candle. This is a very heavy bear candle. Okay, and there was this the gap down. Okay, now because of this bear candle, the sentiments in the market they are bearish. So on Monday you can expect a bear candle. Okay, means not exactly the bear candle, means a candle is whenever you see a market, whenever you see the market is opening, okay, somewhere around here. So market will first try to hit the boundary of the Ichimoku, may enter into Ichimoku, may enter, this the second this the leading span of the Ichimoku, and then may take a retrace. Or if it crosses this the second leading span of the Ichimoku, in that case it will come and it will hit this particular trend line and the support here, and this is your chance to enter into the market, because from here market will rebound. Okay, and if in case, if for some reason if market breaches this level, then we have 34,300, then market will come and hit the 34,300 and then will retrace. And the chances are that it is going to retrace from this particular level, because we have here we have the trend line as well as the support. Okay, and then some of this some participation of the confluential. Okay, so this is what is expected to happen here. Okay, so this is what is expected to happen from here. Market is going to retrace. Now let me write down the support and resistances here also, okay, so that you can take a note. So we have very heavy, very critical resistance at 36,655. Let me quickly write it down here. So it is 36,665. It is 36,665, but sorry, 36,665, 655. But market is not expected to move up to this point, okay, in the coming week, because it is already, because in that case it has to cover almost 1600 1700 points, and that is impossible to gain within a week. Okay, so in that case, not this one, but this may act as a strong and critical resistance for the market at 36,110. 36,110, because market has potential to move by like 1000 points in a week. That's not a problem. Then we have another resistance here at 35,702. So we have 35,700. This is another resistance. Then we have okay, yep, so we have now, earlier it was acting as support, but now it is acting as resistance. So it is at 35,150, 35,150. Then we have yes, this is now very strong support at 34,530, 34,530, 34,530. Okay, and finally 34,300. We have 34,300. So these are the support and resistances, and as you know that my support and resistances are absolute, means whenever you see that market is hitting my support and resistances, market will always take a break. And something will happen in the market, for sure something will happen in the market whenever it hits my support and resistance, because I have analyzed the data of last 100 years of the market, and then I have calculated the support and resistances. Okay, fair enough. So yes, the technical analysis. See, whenever market moves up, okay, and if market moves and if there is a sharp retrace in the market, and and if it comes to, within this week, in that case it is most likely to hit this trend line. Means if first it will hit this resistance, if it crosses the resistance, then it is expected to hit the trend line, and then for sure it will come down 100%, 200% it will come down. Okay, we have the Bollinger Band. This is the lower band of the Bollinger Band. This is the median. Okay, market is below the lower band, below the median, which means market is clearly bearish. Market is clearly bearish. Okay, now we have the moving averages. Market is below the moving averages. Market is bearish. Ichimoku, market has hit the Ichimoku and it is just above the Ichimoku, which means the through Ichimoku market is still bullish. So only through Ichimoku market is bullish. Now through other technical indicators, if you look into these other technical indicators here, so we have MACD. MACD is heavily bearish. It is heavily bearish. Then we have stock RSI. Stock RSI is bearish. It is not marginally bullish, but it is bearish. It is bearish. Okay. Then we have divergence. Divergence is normal. Divergence is in control. Then we have momentum. Momentum is in building in favor of the bears. In favor of the bears. Okay, so now the trade setup. See, the trade setups, it is simple. Whenever you see market is coming down, let it come down, let it come down, let it cross the Ichimoku and let it hit this support and the trend line, and then buy. Buy with everything that you have, because in that case, market is going to see a retrace. And when market sees a retrace, then it will first find 3,550. Okay, it will be the strong resistance, and if it crosses this, then the market will move towards this another resistance, which is 35,700, and then we have the trend line. Okay, now one more thing, okay, that what I'm going to say here is that sell on rebound. Okay, so sell on rebound or retrace, sell on rebound or retrace. So let the market come, then let the market retrace, let the market form a lower high. Whenever the market forms a lower high, on that lower high you are going to sell. Okay, so this is what you are going to do. You are going to sell on rebound. Now what rebound? Okay, rebound means the lower high. Okay, rebound actually means the lower high. It is LH, lower high. So first let the market come up and form a lower high, and whenever the market forms a lower high, okay, on the lower high just sell. Okay, sell with everything that you have. So the lower high is expected to form here. Lower high may form here, okay, or it may form here. Okay, so most likely the lower high will form here, around here, somewhere around here. Okay, whenever the lower high is formed, means market will retrace, lower high will form, and then after the lower high, okay, the market will come down. So this is how the market is going to behave. Okay, so just means do not be in hurry, do not be in hurry. And if you're trading in options, so what you can do here, you can buy call options, let the market move up, okay, let the market form a lower high, okay, and at this lower high exit, and then at this lower high then buy the put options, and then let the market come down. So it means in this direction and in this and in this direction also. So in these two directions, okay, you are going to make a lot of money in options, at least 3 to 4 times or 3 to 5 times easily. Okay. um okay guys, so market is clearly bearish. Okay, this picture is clear that on the daily chart the market is bearish. So I have provided the link of my Discord group, this the spreadsheet, okay, Google spreadsheet, in the description of the video. You can take a look, and also in the comment section. Okay, and also I am providing my email ID, email address in the Google spreadsheet, and also in the description. So if you want to join the group, then you can send me an email, or if you have any questions you want to ask, then you can drop me an email. And also I have given the links to my options trading programs, options strategies programs, and so in the description of the video. Okay, if you are interested, then you can participate in the programs. Okay guys, so this was my technical analysis for Dow Jones Industrial Average Index for the week commencing from November 29th, 2021.